Support and resistance is one of the most common price action strategies, and today I'm going to be showing you exactly how I do it and how exactly it must be done so that you can make profit, right? So stick with me till the end, and I'll show you a very cool strategy when using one support and resistance that most of the books show you, right? But it will make you very profitable, right? So I'm just going to go in general what support and resistance is. Right, so support resistance is just what. So support is when you're supporting something, you're lifting it up, right? Resistance is so like what, pushing it downwards. That's done so that you get the general idea of what support and resistance is. Right, so support and resistance. So let's take for example over here. Right, so these are just horizontal areas of what, areas of interest, right? So on support and resistance, we've got what. So right over here, when checking for what, these two examples, right? So right over here, this is a what, a support zone. Why? Because it's pushing what, the market what, to go up, right? So it's supporting what, this level E, this area of interest over here, right? It's pushing what, that market price up, right? So this is what is support level generally, right? And this is what, a resistance level over here, right? Generally, what does a resistance level say? What they say, you're pushing what, the market price what, downwards, right? So that here, you just mark what, your support and resistance over here. So this is what, a support level, right? And this is what, a resistance level, right? So carry out this practice, right? So that you'll be able to what, to get the general idea, right? And take note, I'm just marking what, my supported resistance over here, and at the end I'll show you, as in a minute I'll show you something interesting about what general supported resistance that we're marking, right? So that you what, be able to get the concept that will make you money in the market, right? So after marking up what, your support and resistance, right? You got your watch chart looking something like that, like this. So we're just marking somewhere where it was, where we haven't marked what before, right? So I think that I've marked what enough what support and resistance is over here, right? So when I'm using support and resistance, I don't like to think of it as an exact point, right? Why? Because most of the times, especially when you're trading on synthetics, right, it doesn't respect that specific area, right? It will just maybe, if you put your stop loss exactly on the resistance, on the support, right, it will just hit your stop loss and then continue on in your direction, right? So you got quite disappointed, right? So when you're trading what, a support, let's take for example this level over here, right? When the market pulls back to this one support level again, right? You're looking to what, to buy, right? So right over here, when it pulls back to this one, to the support level, you'll be looking to what, to buy, but you don't buy yet, right? What do you wait for? Comment in the comment section down below if you think you know what you have to look for first before entering the trade, right? So on the support level, we're looking to buy, and on the resistance level, we're looking to sell, right? So when you approach what the support or resistance level, you don't buy yet or sell yet. Why? Because we have to look for, I guess you guessed it correct, right? We have to wait for the candlestick confirmation, right? So right here on this support level here, right? We've got support level here, and we've got a pushback, and this is also what, a support level, right? So on the support level, you are looking to buy, right? But wait for a candlestick confirmation, right? And this candlestick confirmation is we've got an engulfing candle over here, right? So we take our trade what, on this engulfing candle over there after the close of that engulfing candle, right? Another tip that I'm going to be sharing with you, right? As you can see over here, we had a gap, right? This gap over here, right? That's liquidity in the market, right? So that gap has to be filled. So that's another further confirmation that we'll be looking for. That will what? That will show that we will be looking to, we will be buying out up until what, cover this what, this gap up until here, right? So our take profit was here over on this one, on this supply zone over here, right? That was our first take profit. Why? Because what, as you can see, we're in a downtrend. We broke what, this whole like trend line over here. We broke this low, we broke this low, right? So we are sort of like in a downtrend, right? So on the next supply level, that's when you exit the market, right? I just wanted to show you just the general idea of what we'll be looking at, right? And right here, we've got a resistance zone over here, right? This resistance, right? And we draw it further into the future, right? So when do you enter over here? Since we're already in a downtrend, so this will be what we're going to be holding this a little bit further rather than what than this small uptrend that I was showing you. I just wanted to show you an example for a buy, right? On this resistance level, right? And as I said, I don't like to think of it as an exact area. As you can see right here, if your stop loss was just immediately above, right, it would have been hit, right, and it would have continued downward, right? So I personally place it, if not here, right, I place it above the previous high. This will be obviously more safer and it's more chances of it working out, right? So right here on the resistance zone, right, we do enter for a sell right here, right? We've got a weak rejection over there, right? So slow down in what momentum because we are still like consolidating, right? So we've got what you enter some over here, right? On this engulfing candle right here, right? And it pulls back on you, right? But your stop loss obviously wouldn't have been hit, right? And we've got another engulfing candle downwards, right? And then we what eventually continue to going downwards, right? So looking at this, generally this would have been about a 3 to 1 risk to reward ratio, right? So that's what you look for when you are trading what supported resistance, right? So as I said, mentioned earlier, I'm going to be showing you something quite interesting about what support and resistance. And if you have been trading support and resistance for a while, I guess you'd have noticed it already, right? When a support gets broken, it becomes the resistance, right? So that's what I call flip zones, right? I just heard the term and I just call them what flip zones, right? So a broken support becomes a resistance, right? So right over here, this support here, when it gets broken, right? It gets broken over here, right? When the market pulls back to this specific area, now this support zone is now acting as what? As a resistance zone, right? As you can see, we've got what? And after what? Candlestick confirmation, we've got this quick rejection, slow down in momentum, right? And we continue to going downwards, right? So a broken support acts as what? As a resistance. We also have this support level right here, right? It doesn't get respected over here, right? It gets broken, right? And then this pullback to that support level is now acting as what? As a resistance, right? And after showing what weak rejections over here, we went downwards, right? So that's what you look for. That's the best setup when trading what support and resistance. I don't usually trade what the support and resistance when it's respecting. I usually trade what these breakouts. Why? Because they are frequent and they work most of the times, right? They are respected more, right? And as you can see, this level, right, it was a support, it gets broken, acts as a resistance. That resistance again gets broken over here, acts as a support 1, 2 times. This time, right? And there's this also this time right over here, right? So it acts as what? As a resistance zone, as a support zone 2 times, right? So that's generally how what you look at the market. That's how I want you to analyze the market. And whenever you look at the market, uh, keep checking for something that occurs most of the time, right? So right over here, we've got what? Right over here. This is what the support zone. Let's see what as you can see, right? As I was saying, showing you, this strategy works most of the time, right? This breaks out here, the support zone breaks out. We've got a solar like the retest, but it didn't reach this area exactly, right? So we wouldn't have entered here, we wouldn't have kept it, right? But over here, right? Check how it was a sniper entry, right? So over here, when you enter yourself, it went down, right? So that's just another tip that I want to show you guys, right? So if you like the content, like, subscribe, and share, right? And I'll keep on posting when you have got what when you didn't understand. Comment in the comment section below so that I know that I also have to explain that part to you, right? If there's something that you want to know, or maybe regarding price action for the meanwhile, right? But any other strategy, so that I know that you guys are interested in the topics, so that I can create what more videos on that, right? Trend lines. I personally think that trend lines are far much better when trading price action than support and resistance, right? If you agree with me or if you disagree, comment in the comment section below, and state why you support me or why you disagree with me. I will share with my reasons. I will share with you my reasons later in the video, but I just want to hear your thoughts, right, so that I know if you're on the same page or not, right? But generally, it all depends on your trading style, right, and your character, or on your strategy, right? But generally, they all work hand in hand. They are just a confluence to each other, right? But I will tell you why I think if I were to choose one, I would choose trend lines, right? Comment down below on your thoughts, right? So trend lines, I'm going to be showing you, teaching you what trend lines are, how to draw them, and everything else that you have to know, right? So I'm just in this part, I'm going to be showing you just trend lines, respecting the trend lines and the breakouts, right? The chart patterns I'm going to be showing you in another video, so that this video doesn't get too long, right? And if you want part 3, where I'll be showing you unmatched patterns, also comment in the comment section down below that interested, so that I know that I know that you'll be interested in what in part 3, so that I don't waste my time, right, in creating one of these videos. You already don't like the videos anyway, right? So if you want to motivate me to keep on creating content like this, leave a like and subscribe, right? So back to work, right? What are trend lines, right? So trend lines are generally just the diagonal support and resistance, right? So we're just drawing out support and resistance diagonally, right? But when you're drawing trend lines, you need a minimum of what? Of 2 points, right? Other than support and resistance, where you can just work with what? With 1 point, right? So so that's how you draw your trend lines. So trend lines, you're just connecting what? All your peaks, right? So for example, we're connecting this peak, right? So 1, 2 peaks, right? 3, and the 4th peak, right? So right here, we're just going to be considering this as one peak, right? So that it becomes simpler to you guys, right? So this is just almost one peak, right? So you connect what? These 2 peaks, right? 1, 2 peaks, right? And when the market pulls back to that area, to that level over there, right, you enter your sell, right? You don't enter your sell just yet, right? You have to wait what? Or candlestick confirmation, right? So over here, the candlestick confirmation is what? Over here, when the what? On this engulfing what? Candle. So like engulfing, but it's so like your takes 5, because the candlesticks are almost equal, but either way, it's just showing you that what? It's a reversal pattern, right? So over there, that's where you have taken yourself, right? So that's how you draw trend lines. You need a minimum of what? Of 2 points, right? So that you'll be able to connect them, right? So something over here, right? And most of the times, the candlesticks don't even pull back to that. But that touch was you don't even get an entry, right? Most of the times. So let's take for example over here, right? And let me zoom out my chart so that it's visible, right? So each and every trend line that you draw doesn't mean it has to be touched each and every time, right? Let's take for example over here, right? You have to be patient enough to wait for that touch, right? You just don't enter because it's not reaching out your trend line, so you have to be patient, right? So that's, let me check if there's a visible entry where there is respecting of this trend line, right? So over here I can see this point over here, right? Let me zoom in, right? So you connect these points 1, 2, right? And when there's the third touch, right, it pulls back over here, right? Candlestick confirmation right here on the engulfing green candle, right? You enter over there, pulls back a little bit, and goes all the way to hit your take profit, right? So that's how you draw your trend lines generally, right? In a nutshell, that's how you draw your trend lines, and that's the inspection part of it, right? The inspection part is quite simple, right? You just have to wait for the third touch, so that you'll be able to enter, right? And if there's a candlestick confirmation that's a slowdown in momentum and weak rejections or railroad tricks, you enter the trade, right? That's just one part of it, right? So that's the candlestick inspection part. Right, we've got another trend line over here. We've got 1 touch, 2 touches, right? Third touch. So you've got your entries over here, right? This touch over here, right? Because we are connecting this first touch and this touch, right? So you've got your entry, 1 entry, 2 entries, right? This entry, right? Though most of you weren't even sure that is going to pull back up, but if you know synthetics, you know that the the trend lines and the support and resistance aren't respected exactly, right? You can just dip, right, to stop and right, so that most of the people exit and get scared, right, and you enter, right? But you won't even get scared if you had waited for a candlestick confirmation, right? This only attacks people who enter too early before there's a confirmation. So you've got almost 3 entries over here. That's showing you how powerful this strategy is, right? So that's the first part for candlestick respecting, right? Respecting the trend line, right? So part two, right? So that's the trend line breakout, right? So trend line breakout, there are two variations that I want to teach you, right? Two variations, right? So the first one, let me see if this one works out, right? So you draw your trend line all the way up to here, right? So right here, right, your trend line, right, it gets broken, right? After it gets broken, there's a retest of of this trend line, right? And it's showing multiple weak rejections. This is a strong pattern, right? Multiple weak rejections. It's showing that the market isn't powerful enough to break this level, right? So you enter your sell over there, right? And you have held up until what? Also, it's supposed to overall the minimum was over here, right? Minimum stop loss was over here, the maximum obviously over there, right? But slightly above what is so like this is so like a head and shoulder, right? So above what is left shoulder over here, right? So this the one reason why I'm saying that the trend line is more powerful than the support and resistance, right? So I was mainly talking about the trend line breakouts, right? So on the trend line breakout, most of the times they are very powerful signals that the market is going to pull back even further, right? When this market pulls back, then the market breaks out of the trend line, right? It goes down for quite a while, as you can see from over here. It continued going down, right? So when when there's a breakout of this trend line, right? Your take profits will be all these support levels over here, right? These support levels, that's your first take profit, right? Then there's this support level over there. These are all potential take profits, right? So if you had, so this is the first take profit over here, right? That's the first take profit. Why? Because it's the first support level, right? That's the first, the second, the third, right? Then ultimately, you've got this level over here. Sorry, I wanted to check this horizontal line, but most of the time it doesn't quite reach this level, right? Maybe it might reach over here, right? This flip zone over there. If you don't want flip zones, check out my video on support and resistance, right? It's just before this one. You can scroll down on my channel, right? So these are all potential take profits, right? So it's quite a powerful one. You draw whenever the market touches this trend line, all the support levels where this market touches this trend lines, those are all potential take profits, right? So let me be say you've got 5 entries, right? And you exit each time this here you exit the first entry, you exit the second entry, third entry, you keep on exiting. But as you can see, it shows that the market will go for a long way when there's a breakout in there's a change in market structure. Whenever there's a trend line breakout, there's a change in market structure. It's indicating a change in market structure, right? So until there's a breakout another again to the upside, you keep on looking forward for your downtrend, right? So right here, you can also draw something like and as you can see, all the take profits would have been hit over there in that example, right? So that's how powerful this strategy is, right? So right here, but it doesn't, it's like just like all other strategies, it doesn't work all the time, right? Right here, but for your respecting trend line, you're connect 1-2 points, right? I wouldn't consider this a touch, right? So my first entry would obviously be this one, right? That's the first entry, second entry, right? So generally I got 2 entries when using this strategy, when using the trend line respecting one. For if the trend line is respected, I've got what, 2 entries, right, for a downtrend, right, and over here, we've got what, a trend line breakout over here, right. When it breaks out, it didn't pull back to the trend line, right. Since I'm showing you that the retest of the trend line only for this instance, right, I'm just going to be showing you that, right. So wait for this one, for the market to pull back to that trend line again, right, and that's when you enter, right. So you mark again you potential take profits, right. So you mark each and every time the market pulls back. So that's the first take profit. This will be the second take profit, third take profit, and this is so like the last take profit, right. So right over here, right, and as you can see, the market is going up, right, and it tested the first, the second, third, and the fourth take profits, right, and it broke down again, right. So it's just a cycle. You just keep on doing your trend lines, right. So I personally think that just keep on doing your trend lines. As you can see, after it tested all the way, we take profits to the upside, right. You connect these levels over here, 1, 2 levels, right. There's a breakout. I would have entered for a buy here, honestly, right, and I would have lost. Why? Because it eventually broke out, right, but that's okay, right. After breakout, pull back again to the trend line, weak rejections, you enter again for a sell, right. This time it didn't go further down into profit, and this entry, right, you just get just a glimpse of profit, right. But this way you have to incorporate taking the higher time frame analysis, but overall you would have been in profit. And if you are adjusting your stop loss to break even, right, and if you're trading your stop loss, it wouldn't have you would have been stopped out, but you were in profit, right. So that's how you use this strategy in a nutshell, right. So let me just delete everything. That's one variation that's one variation of the trend line breakout. Let me show you another variation, right. Let me just delete all this stuff, right. Then another variation of the breakout, right. So okay, let me just draw this one, right. So on the first variation, we're saying maybe you're in an uptrend. Let me draw this again. It's better again, right. Let me just remove this and let's start again, right. So we're in an uptrend. Let me change this size, right. So we're in an uptrend, right. We're creating series of my eyes, right. Then we got a breakout, right. So marking my trend line over here. We've got a trend line, right. Then we've got a change in market structure. We've got a breakout over here, right. So for the first example, we're saying that the market pulls back over here to the trend line at any point, right. We're just looking for a test of the trend line again, right, and we enter, right. But you see again that most of the times, at times, the market doesn't pull back over here, right, but rather it pulls back to this level over here. Let me change this color. Let's use purple, right. So yeah, right. So after the breakout, sometimes the market pulls back only to this level, right, and it continues going downwards, right. So those are the two variations that we're going to be looking for, right. Let me draw again this one, the second variation on its own, right. So right over here, we're in an uptrend, right, over there, right. Then we get we draw out your resistance zone, you mark your flip zone, right, and after a breakout, right, the market pulls back to this flip zone, right? It doesn't pull back to the trend line. It only ends up here, right? It doesn't reach over here to the trend line. It only reaches over there, right? That's another variation that we're going to be seeing in the market, right? So let's check if there are any visible examples so that I can be able to do justice to you guys, so that you can walk away from this video with a good example of what I mean exactly, right? So for example, over here, let's see if this one wakes up. Yeah, this one touched. I tried so that it would not wake up, but let's scale it down to over here. This step over here. Right, we've got a breakout of this one, of this trend line, right? I've got a trend line over there. Right, then for the retest, right, we are going to be retesting what? The retest only retested what? This flip zone over here, right? It didn't reach all the way to the trend line. It only put back to the flip zone over there, right? And as I said, if you haven't watched my video on flip zones, check it out. I'll leave a link in the comment section down below, in the description box down below, or you can just check my channel if I forget to put the link, right? So that's most of the variations that we'll get, right? So that's why I was saying that the support and resistance and the trend lines, they're just a confluence to each other, right? Because right now we're combining support and resistance and trend lines also, right? So that's how it works, right? So right over here, we've got a trend line over here. As you can see, we're connecting this side and this level over here, right? And then this pullback, it didn't reach over there, but it almost only tested the flip zone over there, and it would continued going downwards, right? So that's just how we look for these setups, guys. So try this out on demo. Try doing this out on demo before you go live, right? So right, chart patterns, one of the most powerful indicators when trading the market, especially if you're using price action only, right? So chart patterns, this is a continuation of the trend lines that are showing you, right? So why? Because why is it a continuation of the trend lines? Why? Because most of the chart patterns, the flags, the wedges, the ascending triangles, all of them use trend lines, right? But the shapes of the trend lines that you'll be using, that determines the chart patterns, right? So I'm gonna just try to draw some examples, right? So there are two types of chart patterns, right? So the continuation and reversal of chart patterns, right? So continuation patterns, usually we have the descending triangle, right? Then you've got the flag. Those are the continuation patterns that we have. Right? Then for the reversal chart patterns, right? You've got the wedge. That's what we're going to be, but that's what I'm going to be showing you. Those are the two chart patterns that I'm going to be showing you, right? But there are four chart patterns that I'm going to be showing you that I've grouped into two categories, right? But most of the time, it can follow any direction, even if it's a wedge. It can act as a continuation pattern, but generally, I'm just showing you the general idea, right? So what is a flag? Let me start by a flag, right? So let's say I've got we're in an uptrend, right? So let me use green over here, right? So let's say we're in an uptrend, right? We're going up, right? Then you've got so like a pullback, right? So we've got a pullback like here, like so, right? Going up. Then this pullback is creating relatively an equal channel, right? So it's not like just a channel, right? But it's a tight channel. It's consolidating that much, right? So when you've got this channel, right? This channel over here. So this is supposed to be straight, right? So this channel over here, right? It will be something like that, right? Then this channel over here, when we've got this channel, we're anticipating, right? With Forex markets, or about probability, right? As I always say, it's all about probability, right? Nobody tells you that it's obvious, right, for a setup to work or for an indicator to work, but it's all a game of what? Probability, right? So we are anticipating that the market will what? Reverse what? The upside. It will continue what? Buying, right? That's why it's a continuation pattern. Why? Because we are continuing what? We are continuing with what? With this uptrend. That's what we'll be continuing with what? Over there, right? So relatively, most of the times, this is what we call a what? A flag pole, right? This is the flag and another flag pole, right? So the size of this flag pole over here, right? If we measure it from top to bottom, right? The size of this flag pole, that's the same impulse that you are anticipating to happen over here. So if this was 40 pips, right? 40 pips, we are also anticipating that this side, this pole also has around 40 pips, right? But most of the times it doesn't work out that way. Maybe you can have 30 or 50 or even more or less 40 plus. That's what we're anticipating, but a minimum of maybe what 20, right? That's what we'll be anticipating. So it will be a minimum of what half the pole of what this size. That's your potential what take profit, right? Then for triangles, right, for ascending and descending triangle, ascending triangle and descending triangle, they are just so I'm just going to draw the ascending one, right? But they are just the same concept, right? Except for one, we are in an uptrend, for the other, we are what? In a downtrend. That's the only difference, right? So here we go. Where let me use a descending triangle, right? Since for a flag we use what? A bullish trend. So now we're going for bearish, right? So we're in downtrend, right? And then this pullback, this time let me start by drawing what? The triangle shapes easily, right? So generally it's just what? Asymmetrical what? Asymmetrical what? Consolidation. Symmetrical triangle, right? Symmetrical, I think you all get the general idea that we are pointing what horizontally, right? It's not, we're pointing horizontally, right? So for consolidation over here, right, we continue going down. So just like this, right? So this is what we call in a triangle, right? So this is what the descending triangle. Why? Because we're in a downtrend, right? Then this is a symmetrical triangle. Its symmetrical is almost similar. It's almost equal, right? And it's not pointing in any direction. It's just pointing what? Horizontal, right? It's not pointing up or down, right? So it's just pointing what? Horizontally, right? So on this flag, as you can see, on this triangle, it eventually has to break out somewhere, right? Because the market can't keep on what? Consolidating in this one small triangle over there, right? So whenever you see that there's a tight consolidation, right, anticipate an impulse either to the upside or downside. Why? Because the market can't keep on consolidating in this one small area. So there will be an impulse either to the downside or to the what? To the upside. Though for descending triangles and ascending triangles, we anticipate that the trend will continue, right? So whenever there's a what? There's an ascending triangle, we anticipate that the trend will continue. But personally, I don't anticipate that it will continue downwards straight away, right? I just wait for the breakout and retest, then I enter in that direction. If it breaks out to the upside, well, that's it. I'm going for the uptrend. But it all depends on the what? On the higher time frame analysis. If the H4, if the H1 is showing that we're in a downtrend, I will only be biased if it breaks down for a sell. I will be more than sure that it's continuing to go on, to go downwards, right? And if it breaks out for what? For a buy, I will just not enter, right? That's it. That's how simple this is. And this the same is what? It's true for an uptrend. For if we're in an uptrend, right? It's just the same thing, right? We're in an uptrend and we're anticipating that it will break what? To the upside. That's just it. It's the same triangle, right? But different trends, right? So that's what we mean by what? By ascending and descending on triangle, right? Then for the reversal patterns, right? I'm going to be showing what the wedge, right? I'm just going to be drawing what the illustration. Then I'm going to quickly jump into what some chart patterns, right? So that we can be able to grasp the concept, right? So right here we got one. Let me change this. You're in a downtrend, right? Then now for the what? For the triangle, right? It's no longer a symmetrical triangle, right? It's maybe it's what? It's sorry, it's like this. Forgive my drawing. I know it's horrible. Forgive me. Let me start this off. Right. So as I was saying, maybe we're in what? In a downtrend, right? And then for the what? For the pullback, we've got. Let me change this color over here. For the pullback, we're consolidating, but we're going on. Consolidation is what? Narrowing, but it's what? Going what? Upwards like this. It's narrowing, right? So that's generally what we'll be looking at, right? Like over here, right? So over here, this triangle is narrowing, right? It's narrowing, but it's pointing what? It's pointing upwards, right? So if it's narrowing and pointing upwards, you are anticipating that it will go down. It's vice versa. If it's pointing upwards, we anticipate that it goes down. And if it's pointing downwards, we anticipate that it will break what? To the upside, right? So here, if we're in a downtrend, right, we're only going to be biased for what? For sell setups. So if it breaks to the downside, who's back? We enter our sell. That's it. That's what we'll be looking for, right? So let me jump into the chart patterns, right? So right over here, just generally the whole concept of this is just that we've got what? A tight consolidation, right? So we just have to wait for what? For a breakout, for a actual breakout and a retest. Most of the time I prefer that we get a retest before what? Before entering, right? Right. It doesn't matter if it breaks up or down. You just have to continue with what? The trend, right? Right along what? The trend. I am not a fan of what? Reversal patterns, right? So this is a flag, right? Since we're in a downtrend, right? As you can see, so this is our pole over here, right? This is our pole, this is our flag, right? This is our other pole. As you can see, in this case, the other pole is even quite longer than the first pole, right? But if we are measuring from here up until here, there's this one small pullback, right? With almost equal, right? So we've got an impulse, consolidation, and another impulse, right? So that's the benefit of what? Or chart patterns, right? After a slight consolidation, there's usually an impulsive move. The first move, right? You don't have to wait 6 hours in the market, right? It's quite faster than if you're in a buy trend over here. In a buy trade over here, as you can see, it's consolidating way too long. Like this is about maybe even 6 hours holding, so that the market just reverses on you, right? So that's a flag, right? Then this is a wedge over here. Some of these patterns you can even notice them without even not drawing a trend line or anything, right? But just so that you get a clear breakout of the trend line, you have to draw this, right? So this is a wedge. Why? Because it's pointing upwards one, right? And it's narrowing to the upside, right? So here you've got a breakout and a retest of that trend line. So you enter your sell, right? We are continuing this downtrend, right? Consolidation, impulsive move to the downside, consolidation, and another impulsive move. Let me check if there is a so wedges most of the time, especially let's check for example over here, right? So this is a small wedge over here, This is small wedge over here, right? So this, as you can see, we're in a downtrend, right? Then there's a wedge, and we've got a reversal. So wedges, they go either way most of the time, right? They can go up or downwards, right? They don't follow the current trend. This is another example of a flag. I'm not going to draw this due to, because my time is, I've already calculated what my time, but let me see if I can get the what, an example of what, of a symmetrical triangle, right? So exactly something like this, right? So right over here, we've got what, an impulsive move, right? An impulsive move. Then, as you can see, an impulsive move to the downside, a consolidation, and another impulsive move to the downside, right? So we haven't seen this one impulsive move to the downside, but as you can see, an impulsive move, a consolidation, right? The consolidation is only pointing horizontal, hence this is a descending triangle, right? It's not a wedge, right? Because it's pointing horizontally, right? If it was pointing up or down, it would have been a wedge, right? But it's pointing horizontally, it's not pointing in a certain direction. So we anticipate a continuation, and here we didn't even get a pullback to the trend line. It just went straight into straight downwards. So maybe you wouldn't have entered, but if you enter breakouts, you would have entered already over there. So that's just it. The best trade is determined by the trader themselves, right? Depending on their goals and their objectives, right? But get me correct right here, right? There are some general steps that you can take to help you finding the best trade, right? So each and every trader has their own setup, has their own definition of the best trade, right? But today I'm going to be sharing with you some 6 simple steps that you help you determine what the best trade, right? So if I'm gonna share some value with you guys, if I'm going to help some of you guys, and if you like the content that I'm gonna share with you, leave a thumbs up and subscribe to the channel, right? So that you can support me, right? So back to business, right? So generally, I've got 6 steps that are going to help you to what, to determine a good trade, right? And they are going to add these 6 steps are going to modify depending to your character, depending to your trading style, your strategy, right? So right now, okay. So the first step, is to conduct market analysis, right? So market analysis, this is quite simple, straightforward, right? So start by analyzing the market to identify the potential trends, right? Look for trends and patterns in the market that have news, right? The impact, yeah, right? So in the market analysis, you just have to look for a pattern, a certain one, pattern, right? So personally, right, according to my strategy, right? So first of all, when I'm looking for the conducting the market analysis, right? So I first go to the high time frame, right? So it could be the H4, right, or the H1, right, depending on what I'm looking for at that moment, right? So but I generally look at the H4 and the H1 all together, right? So after I go to the H4 or the H1, right, I look for just the general market sentiment, right? So where the market is going, right? So on the H4, right, as you can see, generally this is an uptrend, right? Let me just show you what so when I say that this is an uptrend, right? So as you can see, generally, right here we are going down, right? That's where we're going. This we're still in a downtrend over here, right? And when this resistance point gets broken, right, I start looking for my buy opportunities, right? And it also slightly breaks this major structure point over here, right? So that's when I start looking for my uptrend, for my buy setups, right? I am convinced that there's a shift in market structure, right? Why? Because it has broken the previous lows, right? The previous highs, so, right? So that's when I start looking for my uptrend, right? So judging from this over here, right? We've got an entry over here, right? When there's a pullback to this order block, this supply zone, right? To this demand zone, sorry, right? So we could have entered over here, right? And after the market put back to this to this demand zone, right, it shot up even further, breaking what this size, right? So I'm now convinced that the market is in an uptrend, right? So for me to be convinced that there's a change in market structure, that there is a what it's now a downtrend, right? This low is to be broken over here. Why? Because it's so like the main structure point over here, right? So if the market breaks over here, I'll start looking for my sales, but generally now I'm still looking for my buy setups, right? Right. So that's just what I look for, right? Then generally when I drop down to my H1, right? But since the H4, I've already determined what the trend that I'm going to be looking for when I go to the lower time frame, right? So when I go to the H1, just this just show me that so like the current sentiment, where the current sentiment is, right? So right now I can see that the sentiment is overall down. It's in a downtrend, right? So right over here, why am I saying it's a downtrend? Right, we are continuously breaking these lows over here, right? So we are creating lower lows, right? So that's just showing me that we're currently in a down sentiment, right? So after that, I drop down to my 5 minute or my 15 minute, depending on where I find the entry, right? So after conducting your market analysis on the higher time frame, I drop down to my lower time frame for my entries, right? For my lower entries, that's point number 2, right? Identify potential trades, right? Based on the market analysis, and identify potential patterns, right? So depending on your strategy, right? So the strategies can differ, but they have the same they have the same entries, right? So I'm just going to be showing you just 2 examples on this on this chart, right? So this crash 300, sorry, right? So right here, right, we've got let me take example of this trade over here, right? Why the trade, as I showed you in the on the 1 hour time frame, when in downtrend, right? So it was okay to look for a sales setup, right? So right here we've got a supply zone over here, right? The supply zone. So where does the market do at the supply zone? It drops down, right? And we've got also a flip zone over here, right? A reaches to the previous support, right? That gets broken. It's now It's now a resistance, right? So right here, right? If I'm using price action, that's a valid entry point, right? And it's showing rejection over here, rejection over there. This candlestick show me that it's showing rejection, right? So that's the price action point of view of it, right? I also like to use moving averages, right? So this is the same setup, right? This is the exact same point over here, right? And right there it's rejecting my 200 EMA, right? So when I'm using my moving averages, I didn't even draw a supply zone or demand zone, right? I didn't even draw my support and resistance or even my trend lines, right? Just the moving averages, right? But so this confluence, it shows me that the market is going to sell, right? Because we are already in a downtrend in the H1, right? So that's a further confirmation that we are going to fall down, right? Then over here again, right? We've got right here, we've got a trend line. There's a trend line that I draw right here, right? Connecting this eye, these small eyes, and almost this eye also, right? So this is a strong This is a strong resistance trend line, right? And it gets broken over here, right? Gets broken, retest, and it pulls back up, right? So right here, when the market pulls back over here, right? So this is a demand zone, right? Over here. So that's why I marked it over here, right? So this is a demand zone. So I've got an entry over here, and also this is a retest to the flip zone over here, right? This resistance here gets broken over here. This is a retest to that flip zone, right? So this is a valid entry, right? because now since the 84 time frame is showing that I will have to get back to a buy to an uptrend sooner or later, right? And as you can check over here, right, this also at this moment in time, right, it's also retesting on my 50 moving average. So this just further confirms, shows that whatever strategy you use, whatever strategy, whatever preference you have, the preference strategy that you have, right, it doesn't matter which strategy you use as long as you are all profitable at the end of the day. So don't listen to people that criticize each and every strategy that you use, any strategy that you use. As long as it's working for you, just backtest it now, right? Otherwise, you can be able even to spot these setups even one without putting in any indicators, or just you'll be able to know which and each and every strategy, each and every one setup that will be have the potential to work, right? So now we got 2 points, right? Firstly, conduct the market analysis, right? Secondly, identify potential trends, right? Then the third point for you to get a good entry, right, a valid entry, right, is evaluate risk reward ratios, right? So general risk reward ratio, I think everybody knows about this, right? Let's say you're willing to risk what $5, right? Make sure at least the risk reward is what is 1:2, right? So where you're risking $5, make sure you have the potential of what getting $10, right? If the lowest it can be 1:1, but I don't personally like to use that, right? So evaluate where your stop loss is going to be, right? So I'm just going to be using these two examples that I've shown you, right? So right over here, right, my stop loss is going to be over here, right? So let me take back this one. Okay, let me just put another horizontal line over here where I was showing you guys, right? So right here, right? So this is my one, this gray box right over here, right? This is my entry point, right? So my stop loss is going to be over here. So let me put this back up. So it goes up until this peak tick over here, like this highest point, right? So my stop loss is going to be over here, right? Above this one, this high, right? If it's the maximum stop loss that I can put, it will go over here, but I personally will put it over here, right? So if I enter, let's say as soon as it touches over here, right? So this is about what? Oh, 37 pips, right? So I'm targeting this low over here, right? So you can easily tell that this low is my first take profit, right? So if I'm selling over here, this will be my what? My first take profit over here. So you can easily tell that this is what greater than your 1:1 what 1:2. This is a what almost a 3:1 ratio, right? So that's what I mean by what risk to reward ratio, right? So make sure that you are targeting more than you are willing to lose, right? Each and every moment in time, right? So that's just how you go about it, right? Over here, my stop loss is going to be over here, right? Below here, right? And my take profit is this resistance over here, so maybe over here, right? So that's a 1:2 ratio, right? So then for the third point, right? Set for the fourth point, right? Set entry and exit points, right? So now you've got what you enter your stop loss and your take profit. You know your potential take profit and your stop loss, right? You just have to set them, right? Just place your take profit and your stop loss and take the what and jump in the market, right? Why do you have to put what your stop loss and your TP, right? Maybe most of the time, so that your emotions don't get in the way, right? After you set your stop loss and your take profit, don't temper on them, right? Don't change them for any other reason, right? Don't let the emotions get the better of you, right? Make sure that the stop loss and the take profit that you finalized, you stick to that, right? And you don't change them. Why? Because most of the time you continue moving your stop loss or your take profit just depending on what you feel, right? That's not how the market works, right? So for example, right, your take profit you said is over here, right? And if you see the market is moving in your direction, you'll obviously be tempted to keep on what? Moving it up, right? Though the market we might just, because you'll be tempted to make more money, right? Though the market will not even reach over here, in most of the cases you know that the market won't even reach there until it pulls back down, right? But you just keep on adding what your take profit, right? That's that's a no-no, right? And don't add other entries when the market is already started moving. Let's say the market has moved all the way over here, right? Why? Because your potential stop loss is going to be far greater than the person who took the trade early over here, right? So don't enter late in the market, right? So now we've got four rules, right? Firstly, conduct market analysis, right? Identify potential trades, right? Then evaluate risk reward ratio. Then set your entry and exit points, right? And for the fifth rule, right? So for the fifth rule, you have to monitor your trade, right? Why do you have to monitor your trade? So that you know there's most of the times the market forms candlestick formation, right? There are candlestick patterns that tell you that the market is about to reverse, right? So whenever you see, so like maybe over here, like maybe you're in a maybe over here, you took this resistance zone, right? This resistance zone, right? And you entered your sell over here, right? And you're in your sell, right? Right over here, when the market reaches this demand zone over here, right? And you see this morning star formation, this doji formation right over here, right? If you're monitoring your trade, you can see that this market is about to reverse. Why? Because there's a drop in momentum, right? But if you aren't monitoring your trade, you lose your money. And don't be scared to what. Let's say your take profit was over here, right? If you see that the market is about to reverse, take your profit, right? You don't have to wait and just stick by that, right? You just have to take your profit, right? What's not good is adjusting your take profit way further, right? But where you know the market won't even reach, right? So if you see that the market is about to reverse, just take your profit. Whenever you're not sure in the market, just take your profit, right? You don't have to keep on holding, right? Then last and but not least, right? This is the last point that I'm going to be sharing with you, right? So if you found value in this so far, in this video, right? Hit the subscribe button and turn on the notification bell so that you get notified whenever I post new content, right? So for the last tip, I'm going to summarize all the points together so that you can maybe jot them down so that you'll be able to remember them, right? The last point is review and analyze the performance, right? So it doesn't matter if the trade loses, right? You have to, or if it wins, right? You have to review each and every trade that you take, right? Know why you took the trade, right? If it works out, jot down why the trade went in your way, right? If it doesn't work out, try to be honest with yourself and answer why it didn't work, right? Though sometimes the market just reverses for no apparent reason, right? But most of the times there is some error that you put your stop loss too close or too far away, right? Maybe you take profit, you put it too far away. Maybe you entered in haste. Maybe you fear missing out, right? Jot down everything, each and every emotion that you feel, right? After jotting down, I promise you'll be able to improve each and every day that you take on a trade, each and every day that you practice, right? So I'm just going to summarize the points over here, right? So the first point is conduct market analysis, right? The second point is identify potential trades, right? Third point, evaluate risk to reward ratio. Fourth point, set entry and exit points. Fifth point, monitor the trade. Sixth point, review and analyze the performance of that trade, right? So that's it for this episode, guys. So if you like the content, like, subscribe, and share the content, right? Thank you. That will be all.